So we are basically doing the same question that is basically for standard costing, A2 accounting, and that has come in February, March 22-32. So we are going to solve the same question. We are done with sales variances, sales price, sales volume, and total sales variance. We are done with the material variances also. I have calculated material price, material usage, and total material variance. Always remember that material price and material variance, material usage variance is required, but in D part. It was required actually, but we are already done with that, right? Then we have to calculate the direct labor total variance again. I will calculate the total variance along with the two sub variances, which is labor rate variance and labor efficiency variance. Same is the case with fixed overhead total variance. I will go with all the variances regarding the fixed overhead. Okay. Let's start the labor rate variance. So labor rate variance, obviously it is the difference because of the price or rate of labor. Sorry, why did I written it again? So the formula is going to be actual hours because we know that labor is going to consume with according to the hours. So actual hours into actual rate, and then actual hours into standard rate. Because the difference will be only because of the hour, because of the hours, or because of the rate. Sorry. That is why that is labor rate variance. Hours will remain the same and rate will change. Actual rate and standard rate. Let's see that what is going to be our actual hours. In this particular part, we don't need to find the actual hours because the actual labor cost is given. But I will do that. I will do that to make you understand that how the things work actually. So 128520 divided by 25.5, we will find the actual hours. But
5040.
Okay, thank you. 5040 into 25.5. So let me write here. 5040 multiplied by 25.5. We will get the amount 128520 over here. Then I will calculate actual hours into standard rate. So 5040 is the actual hours as you have calculated. And standard rate, we know that the standard rate is 25. Here it is, no, sorry. Here it is written. The direct labor standard rate is 25 per labor hour. I will write here 25. What is the amount now? 5040 into 25. G.
126000.
126000. So the answer is coming in positive. So that is going to be the adverse variance, and how much it is going to be? That is 2520. Okay. Why it is adverse? Because our standard rate is 25. We should pay the labor at the rate of 25 per hour, but we are paying 25.5. So it means that we are paying more amount per labor hour to our labor. So we have hired expensive labor. You can say that also, that we have hired expensive labor. So labor is basically expensive. Now we will calculate labor efficiency variance. Let's calculate labor efficiency. Labor efficiency variance. And the formula is going to be, जो labor rate variance का last part है, we'll use that actual hours into standard rate, and then standard hours into standard rate. Okay, so actual hours, that is 5040 multiplied by standard rate is going to be 25, which is already calculated, given, and the total is 126,000. Now, the standard rate is the same. That is going to be 25 per labor hour. But how we will calculate standard hours? Standard hours means actual at standard. Means actual units per standard के हिसाब से कितने घंटे लग रहे हैं. I will go back. Actual units हैं कितने पहले ये देखते हैं बेटा. हमारे actual units है 1120 और standard के हिसाब से एक यूनिट पर कितने घंटे लग रहे थे हमें पता है 4000. Remember, we calculated that 1 lakh divided by 25, that is 4,000. Let me do it again for you. 1 lakh divided by 25, that is 4,000 hours. Divided by 1,000 units are produced. So 4 per unit. 4 per unit is going to be the hours. That on 1,000 units, we are basically each unit is taking 4 hours. So 4 hours per unit is going to be the hour. So let's do that now. So the actual units are 1120, and according to standard, each unit requires 4 hours per unit. So the standard hours are going to be how much? 1120.
448.
4480. Now you will multiply with it 25. What is the amount?
112000.
112000. Now you take the difference. 126,000 minus 112,000. The answer is in positive. It means it is adverse. And that is 14,000 adverse. Because you should have taken 4480. According to standard, you should have taken 4480 hours to produce 1120 units, but you are taking 5040 hours. So the labor efficiency variance is adverse because the labor is not efficient. Maybe labor is not that skilled, and they are taking more time to produce the same number of units. Okay. Now, I will go with the total labor variance. Actually, in the question, that is the requirement of total labor variance, but I am going to calculate the whole stuff actually for you so that you may be able to analyze the whole chapter. So that is the difference between the first and the last. First means actual hours into actual rate and standard hours into standard rate. I don't need to calculate the amounts, but if you want me to write it, I will write because the amounts are already being calculated in our variance. And that is actual hours into actual rate. So let's calculate that. Let's write it. Let me write it down also. So actual hours is going to be 5040 multiplied by 25.5, and standard is 4480, the last one, into 25. So this will become 128520, and this will be 112000. So what is the difference now? And that will be equal to the labor rate variance and labor efficiency variance. If you combine them, you will get the same answer. What is the answer?
16540. 16540.
520.
540.
520.
16450. Sorry.
No.
So 16520.
Yeah. Because that is positive, so it is an adverse variance. Like this is also adverse, and this is also adverse. Labor rate variance is adverse, and labor efficiency variance is also adverse. We will add them up. 14,000 plus 2520, that is 16,520. So it will be the same answer. So this is how we are done with material variances and labor variances, all of them. And now we are going to calculate the overhead variances. So let's calculate the overhead variances. First, we have overhead expenditure variance. Overhead expenditure variance. And the second one is basically overhead volume variance. Okay, first of all, let's discuss about the overhead expenditure variance. That is the difference. It is the difference between actual overhead cost and budgeted overhead cost. It is the difference between actual overhead cost and budgeted overhead cost. That is the overhead expenditure variance. Actual overhead cost and budgeted overhead cost. So let's see that what is the actual overhead cost. And budget overhead cost is also given in the question, that is 24,000. And actual overhead cost is also given, that is 25600. Okay. So let's calculate that. 25600 is going to be the actual overhead cost. I will write here 25600. And budget overhead cost is going to be how much? That is 24,000. So the difference is going to be, that is 1600. And again, it is a cost variance. So 1600 positive means that it is adverse actually, because we have budgeted that our hours are 4,000 hours, labor hours are consumed at the rate of 6 per hour. So the budgeted overhead cost should be 24,000, but actual overhead cost is 25,600. So that is 1600 more than our budget. That is why we have adverse variance. Now we will calculate overhead volume variance, and that is the difference between budgeted overhead cost and standard overhead cost. Budgeted overhead cost, I will calculate again. That is 4,000 hours into 6, and it is going to be 24,000. And standard overhead cost means that you have to use the standard hours. Rate will be the same. Standard hours into standard rate, overhead rate, that is 6. Okay, right? But how we'll calculate standard hours? Standard hours means that we have already calculated in labor efficiency variance also, that the standard hours are 1120 units are produced. And for each unit, the rate per hour, the hours per unit according to the standard is 4. So the standard hours we have calculated, that is 4480. Sir, why we are multiplying it with 6? Why not 25? Because the standard overhead rate is 6. Calculate it. You can 24,000 divided by 4,000, because the hours, budgeted hours are 4,000. So $6 per labor hour is the overhead, fixed overhead rate as per standard. So what is the amount? Can you tell me? 4480 into 6.
So 26880.
26880. And if you see, this will come negative. Negative means this is going to be adverse. And how much it is adverse? 2880. Adverse is the answer. Okay. Now we will go the total overhead, total fixed overhead variance. Actually, the question requires us to find the total overhead variance, but I have calculated the both parts also. That is the fixed overhead expenditure variance and the overhead volume variance. So that is the difference between the actual overhead cost. The total variance is the difference between actual overhead cost and standard overhead cost. So actual overhead cost we have calculated, we have been given, that is 25,600. And standard overhead cost we have calculated, 4480 into 6, that is 26880. So what is the difference now for the total overhead variance?
1280.
1280. So 1280, and it comes negative. That's why it is favorable. It is negative or negative. This is positive, adverse. This is favorable. Okay. We have done it wrong. Actually, this is favorable. Right? Because for standard overhead, we should have incurred 2426880, but actually we budget is 24,000. That is favorable. Why it is favorable? I will tell you. The answer is negative, so that's why we take it favorable. And then we have calculated the total overhead variance, actual overheads and the standard overheads. 25,600 with standard overheads is 26880. The answer is going to be again negative, so it is favorable. And if you multiply the if you combine the overhead expenditure variance with the overhead volume variance, you will see 1600 adverse and 280 favorable. It will come 1280 favorable. Now let's see that, sir, why this is favorable. Why overhead volume variance is favorable. See that budgeted overhead cost says that you are going to produce 1000 units and you are taking how many hours? 4 hours. But beta, you have produced more units. You have produced 1120 units, right? And the standard rate per hour, standard overhead is 4 per hour, and you are consuming now 4480. So this is favorable because you are able to produce more units. So that is why budgeted overhead volume variance is favorable, because the actual units produced are more than the budgeted units produced. All the things are same. See, no, okay. The hours per unit in both the amounts in overhead volume variance I'm talking about is 4. The rate per hour is 6. So what is the difference? The difference is between the units in the volume. तो भाई हमने एक्चुअल ज्यादा यूनिट बनाए हैं ना, तो तभी तो फेवरेबल आ रहा है आपका ओवरहेड वॉल्यूम में। ओवरहेड आपका इतना बच गया 2880 से। ये हमने इस तरीके से इसको जो है सॉल्व वो किया है, और टोटल ओवरहेड वेरिएंस भी हमने फाइंड आउट है वो कर लिया है। ओवरहेड वेरिएंसेस थोड़े से डिफिकल्ट हैं. We can have a complete lecture on overhead variances if you haven't studied it earlier. So overhead expenditure variance and overhead volume variance, that is the difference between actual and budget, and then overhead volume is the difference between budgeted overhead cost and standard overhead cost. You don't need to calculate actual overhead cost. Normally it is always given in the question. So it is given that actual overhead cost is 25600, and always remember that when we are calculating standard overhead cost, we are using standard hours, and these are the same standard hours which are used in labor, because overhead is consumed according to the labor hours. So actual units are 1120, and on each unit the labor hours per unit is 4. So the standard labor hours are 4480. It is the same over here, but we have multiplied the labor efficiency variance with 25. That is the labor rate per hour, and it is 6 is the overhead rate per hour. So this is how we are done with that. Now he is asking us that you're supposed to distribute the material variances in 2 parts, which we have already done: material price variance and material usage variance. We are done with that. This is material usage variance and material price variance. But what is the reason? So reason is this, that basically we are purchasing low quality material. That is why that low quality material is cheap. And that's why our material price variance is favorable. And because we have purchased low quality material, that is why there is a more wastage of that material. That is 6160. Although 5600 kgs should be used, but we are using 6160 kgs more because the labor quality is not that high. So that is why it results in more wastage. That is why your material usage variance is adverse. In spite of that your labor efficiency variance is also adverse. Okay. It means that your labor is also not skilled. It means that your labor is also not skilled. Why it is not skilled? Because basically, no, adverse here labor efficiency variance. Your labor adverse here. Your labor is also not skilled, right? Even then that you are paying them a high rate, even then the labor is not that skilled, right? And because of that, and because of low quality material also, what is happening? That the material usage variance is adverse. We are using more material because the unskilled labor is wasting the material, and the material is also of low quality. That is the 2 reasons. We can combine these variances like this to analyze the situation. दोबारा रिपीट कर देता हूँ, नो प्रॉब्लम. देखें, ये मटेरियल और लेबर वेरिएंसेस का आपस में लिंक है. लिंक क्या है? देखिए, मटेरियल हम महंगा, मटेरियल जो है वो हम सस्ता खरीद रहे हैं. सस्ता मटेरियल जाया होगा इसलिए मटेरियल यूजेज वेरिएंस आपका एडवर्स आ रहा है. लेकिन जाया वो इसलिए भी हो रहा है कि आपकी लेबर भी स्किल्ड नहीं है, क्योंकि आपका लेबर एफिशिएंसी वेरिएंस भी एडवर्स आ रहा है. आपकी लेबर ज्यादा टाइम ले रही है उन्हीं यूनिट्स को बनाने में, तो लेबर एफिशिएंसी वेरिएंस भी एडवर्स है. हालांकि आप लेबर को ज्यादा पैसे दे रहे हैं फिर भी. तो बेसिक प्रॉब्लम कहाँ पे आ रहा है? आपकी लेबर के अंदर भी आ रहा है कि लेबर भी आपकी एफिशिएंट नहीं है और आपका मटेरियल क्वालिटी भी इतनी अच्छी नहीं है. So this is how we are done with this. Next part, let's see. In July, Y Limited had adopted a new strategy to increase sales by reducing the selling price Advise the director of Y Limited whether or not the company should continue the strategy in the long run. Justify your answer. To increase sales by reducing selling price. So reducing selling price will always result in increasing the sales, and definitely it will result in increasing the profit also. But if you just look at the actual results of this particular question, we are having a profit of 50952. So they wanted to decrease the material price. But if you just look at the question, our sales price is already less than the standard. The standard is 250, and we are selling the standard price is 250 and we are selling at 248. So already our actual price is less than the standard. So if we decrease the selling price more, maybe people think that we are producing low quality products and the customer will lose interest. Secondly, if there is a high competition in the market and we believe that other competitors are offering low price, then we can reduce the price because we have enough, we are still in profit. So we can afford to reduce the price, right? But our sales price variance will go even more adverse. And currently our sales volume variance is favorable, right? So it means that whatever standard, according to the standard, we are selling more units. So maybe decreasing the selling price will not be able to increase the sales. वजह ये है कि आप selling price को decrease क्यों कर रहे हैं? So that more customers should be attracted towards our product. But maybe it is not, it might not happen because our standard is that we can sell or produce 1000 units. So maybe there is a, the market, according to the market research, we don't have that much customers available for the product, right? But if in the future, because it is in the long run, if in the future we see that the more customers will be attracted if we decrease the selling price, then we can go for it because decreasing selling price will definitely increase sales. Maybe our sales volume will increase more. It is 1120, and then it will be result in more sales and we will have more profit. So sales might increase by reducing the selling price, but we have to see that the quality should not be compromised. The quality of the product should not be compromised. Maybe we will be able to have better quality material and better discounts on material. That is also a possibility because our material price variance is we are purchasing a high quality material. In spite of that, the usage variance is negative. So maybe we will be able to get the same material at a low price because of bulk buying discount, because we are going for more sales in the long run. That's why. Okay. So if you want to advise, I will rather suggest that we should not go for decreasing the selling price to increase sales. Rather, we should go for advertisement and other stuff that will be more appropriate. And if you see that suppliers are ready to give you the discount, a bulk buying discount, then you can adopt the this strategy of reducing the selling price so that your sales should increase and your cost should not increase in the same manner. Okay, so this is basically we are done with that. And this is the question we have done for February, March 22 and 32. So you can solve questions of, you can solve this question. That is, now I'm going to prepare the reconciliation, although it is not a part of the question, but I want you to go for the reconciliation. If you write it down, you can write it down. Reconciliation of actual reconciliation of flex profit with the actual profit. Or you can say reconciliation of flex contribution with the actual contribution. So I will write flex profit over here. This is a part of the question. This is not a part of the question, but I am doing it because it used to come in the paper more often. Flex profit we have calculated, that is 73920. But he wanted us to go for the reconciliation through variances. The examiner wanted us to find the actual profit through variances. So flex profit is 73920. So from where it has come, we have calculated. We have calculated the flex profit. Here, we are using that flex profit actually. And now, all variances will be adjusted, like how favorable variances is going to be added and adverse variances is going to be subtracted. But remember that you will not take sales volume variance in this particular reconciliation. So sales volume variance will not be taken into account. All other variances we will take into account. Sales volume variance will not be taken into account because the difference between flex profit and actual profit is not because of the volume in units. It is because of the rate. Either we are using actual rate and standard rate. So flex profit, now sales price variance, if you see, it is adverse. So it will be subtracted. Sales price less sales price. I will go in bracket 2240. Then we have material price. Then we have material usage. Let me write it down first. Then we have labor rate. Then we have labor efficiency. Yeah, I told you that sales volume variance will not be taken into account. Then we have overhead expenditure. And then we have overhead volume. And that's it. And by combining all these, you will get the actual profit, which you want to find. Actual profit is given in the question, but you want to go for a reconciliation of flex profit with the actual profit through variances. Okay, so let's see. Material price variance, that is where it is favorable 1, 2, 3, 2, it will be added. Then material usage variance, if you see, that is adverse, so that is going to be subtracted 6720. Adverse variance will be subtracted and favorable variances will be added. Then we will go with the labor variances. So let's see. The labor rate variance, we have to see, here it is written. The labor rate variance is adverse 2520. We will subtract it. 2520. Then labor efficiency variance. Let's see. Labor efficiency variance is adverse again, 14,000. It will be subtracted. Then overhead expenditure variance, that is going to be here adverse 1600 subtracted, overhead volume 2880 favorable, that will be added. So overhead expenditure will be subtracted, that is 1600, and overhead volume will be added, that is 2880. So what is the answer? You can calculate now by combining all these, by adding all these stuff. You will find the actual profit, means 73920 minus 2240 plus 1232 minus 6720 minus 2520 minus 14,000 minus 1600 and plus 2880. You will find the actual profit. Actual profit you can calculate also by preparing the actual budget or by preparing actual income statement. But he is going to, the examiner has asked you to prepare a reconciliation starting from flex profit and reaching on the actual profit through variances, through the differences. So we have to prepare the reconciliation starting from flex profit and then calculating the actual profit. So all the favorable variances will be added and adverse variances will be subtracted, but sales volume variance will not be taken into account. Why? Because the difference between flexed and actual profit does not include volume. It is all because of the rate, standard rate and actual rate. That's why volume variance will not be taken into account. I will explain you more. If you see the flex budget, if you just see the flex budget, you will find out that we are using all actual units. Okay. In flex budget, we are using actual units. And if you prepare the actual budget, you will use actual units. So that is the point. So in actual profit statement and in flex profit statement, or you can say in flexed budget and in actual budget, there is no difference between the units. In flex budget, we are using actual units. You are seeing, I have make a box of it. And in actual budget, obviously you will use actual units, right? So that's why the flex profit and reconciliation of flex profit with the actual profit does not include any variance where there is a difference in the units. Sales volume variance, if you see, there is a difference in units. So that's why it will not be taken into account. So we'll start with the flex profit and we'll reach the actual profit. Reconciliation from flex profit to the actual profit through variances. Favorable variances we will add, adverse variances we will subtract, and we will get the actual profit. So what is the answer, please tell me? You didn't calculate yet? So we are basically done with the chapter and we have almost, I have solved everything, but it doesn't mean that we can't repeat it. We can repeat it. We can do that. We can do such questions more. I have solved many questions, on my YouTube channel also, Learn Accounting with Saharis. You can start, share it. You can see from there also. Then there is also a reconciliation of flex cost with the actual cost. So when we are basically taking the flex cost and we are reconciling with the actual cost, we will not take sales variances. We'll take only cost variances. So in that, sales volume and sales price both will not come. And all adverse variances, you have to go for the reverse. Adverse variances will be added and favorable variances will be subtracted to find the actual cost. This is how we will, because favorable means that actual cost is less than the flex cost. So we'll subtract. Adverse means that the actual cost is more than the flex cost. So that's why we have to add adverse variances in the flex cost to find. So 73920. बताएं क्या आंसर आ रहा है इसका? 32.
Sir, 50952.
6720 minus 2520. मैं भी कैलकुलेट कर लेता हूँ. 14,000. Yeah, right. So that's it. 50952 is the answer. So this is how we are done with this. You can solve the questions of the variances. In the next class, we will solve more questions. The last questions which has come in the exam regarding standard costing, they are very difficult. I'm talking about May, June 2024 and October, November 2024. We have very difficult question of standard costing. So we'll solve those questions also, inshallah. Any problem? Thank you very much. Allah Hafiz then.